Hello and welcome to an Hola Prime futures video. This video will talk about what are futures markets, as I know a lot of you are probably coming from the CFD or stock trading world and may not be completely 100% sure what it is you're getting involved in. The futures market is a huge market that is essentially run out of Chicago, although it's definitely global, but it got its start there. The futures market is a place for people to perhaps hedge a commodity that they offer, for example, farmers and soybeans, and for places like huge corporations. We'll use Kellogg's as an example that makes a lot of cereal, to have a set price buying corn. That was the original process. Now, we've evolved quite a bit since then, and it's also worth noting that futures markets are levered instruments, meaning that they're not like buying stocks in the sense that you buy 100 shares of Walmart, you have 100 shares of Walmart. You get to use margin, and it depends on the market. It does fluctuate, and sometimes the exchanges will set the margin rates differently depending on what's going on. But you can control a massive amount of something, crude oil, gold, whatever, with a small margin deposit. Now, as I alluded to previously, when this all started, it was a place for farmers and corporations to come together and buy and sell. That's literally how it started. Some of the oldest markets are the agricultural markets. But since then, we've seen a lot of other markets get involved: gold, oil, financial futures. So, for example, the 10-year note, the NASDAQ. So there is a widening array of instruments, including currencies. There are a ton of markets to be involved in. Not all are easy to speculate in, which is what your job is. You're just simply trying to profit, because some aren't as popular. So, for example, you may struggle doing well in the palm oil market or the electric futures markets, which aren't offered at Hola Prime anyway. But there are futures contracts out there for them that can be quite difficult to trade unless you have a huge account. Speaking of which, your job as a speculator is to provide liquidity for larger players to be able to buy and sell. The speculator is just simply trying to buy oil at price A and sell it at price B, for example. The futures market does close. It closes at 4 p.m. Chicago time, although it does slow down considerably before then. There are some futures that have settlement times earlier. And for example, like 3:15 Chicago time, there are a couple of basically metals that will not close, but it's the settlement date, and a lot of the liquidity and volume disappears from the market. It's worth noting the futures markets do run 23 hours a day. At 4 o'clock in Chicago, everything shuts down for an hour, so we can balance the books and perhaps settle some transactions. This is the same thing that stock markets do at the end of every day. They just simply try to match orders after the fact to make sure everybody is conducting business in a fair and efficient manner. Markets, as a side note, the stock exchanges in the United States are looking to be open for 23 hours a day as well, as the futures market has already shown it can be done. Now, that doesn't mean that every moment of the day is the same. When futures kick back off at 5 o'clock Chicago time, 6 o'clock New York time, I can tell you from experience they are very thin. There aren't as many participants, and it takes a few hours for the Japanese to show up, as well as the Chinese, and start to flood the market with orders. It's a lot like Forex in that sense. We do have the rollover at 5 p.m. in New York in Forex, and there's a shutdown in some servers for about 5 minutes. And then you move forward, and you get erratic moves, wide spreads, the like. with only New Zealand being on board. And the futures markets are very much the same way. Give it a couple hours, the big banks get on board, and everything goes back to normal. The market is primed to be efficient, and that's why you're allowed to participate in it. And that's why there are contracts of different sizes. Unlike Forex, you can't put in 0.03 contracts. They are standardized contracts. So for example, you can trade the S&P 500 markets, the E-mini S&P 500, which is one of the most popular ways to trade. Some people would speculate with it. Maybe you have a long position in the stock market, but you're worried about volatility, so you short the S&P 500 in the futures market. The idea is if you see your portfolio drop, that short position in the S&P 500 should give you money in your other account, and you can just kind of smooth out the volatility. It's what hedging is. But not every market trading account can support that. So there are also micro contracts, and they are 1/10 the size. So, for example, the NASDAQ is $5 a tick, minimum fluctuation for the E-mini, and the micro NASDAQ is 1/10 of that, so it's 50 cents. These markets can be very volatile, providing plenty of opportunities most of the day. There are a lot of algorithms trading in, and they do tend to be more short-term focused. While you can be a swing trader in the futures market, the reality is that the margin or the money you have to put up for your position is one thing, but once you go into overnight, it changes radically, and overnight being non-normal business hours in Chicago. So your margin becomes a lot higher, and therefore most prop firms, Hola Prime included, want you flat at the end of the day so that margin doesn't become an issue. You can get a wild swing in thin conditions and have your account blown out because you have to have double the margin to begin with. The leverage does vary from contract to contract. The exchange will set the margin rates, so it's a lot more powerful than stocks and is pretty flexible in the same way Forex is. And in fact, you could probably say it's kind of a happy medium between those two worlds. The opportunities for both hedgers and speculators abound in this market. Just think of being a purchase manager for a major cereal conglomerate, and you need to buy a certain amount of tons of corn, and you need to know what it's going to be. So you can buy it ahead of time in whatever month it is you choose to take delivery, and you know that you're going to get X amount of bushels at X price. That's the other thing that does make futures a little bit different, is that you are speculating on the future price. Now, when I left the Forex world and started dabbling in futures years ago, that was a bit of a conundrum for me. The reality is it's not a big deal. You just need to make sure you're trading the front month contract. The month it is generally doesn't matter too much, unless you're talking about something like natural gas, which has a definite cycle to it. So look for the volume. You will see candlesticks instead of dots for price, or you can just go to the CME, the Chicago Mercantile Exchange, flip through the contracts, find the one with the most volume, and that will be the contract you're trading. It just so happens that it's done automatically for you here, so you don't even have to worry about it. Beyond that, there isn't a whole lot to worry about as far as making a transition. You will find that, for the most part, if you're buying copper, it's the same thing as buying copper in a CFD market. The difference is it is a centralized exchange, so therefore, you know that the counterparty will take a look at their position, put their order in, and you get matched up at the exchange. So let's take a look real quick at the platform, and we'll see some of the contracts that you're able to trade here. Okay, so in front of you, I have the Project X platform that's offered here at Hola Prime. And you can see on the chart, you can do symbol search, and let's just see what's there. / and then it will list all of your different products. As I flip through this, you can see the euro, the Swiss franc, the yen, the micro euro, that's 1/10 the size, the euro FX, Canadian dollar, British pound, micro, Aussie dollar. So a quick word about the currency futures. For example, you in the 6A/6A, that's the Australian dollar, you are looking to speculate on the price of the Aussie dollar. So if you're a Forex trader, it's the same thing as AUD/USD. However, the Canadian dollar is reversed. It's not USD/CAD, it's CAD/USD. So you have to remember that if this rises, that means dollar CAD is falling. The other markets include oil and the different sizes, the Nikkei markets, the Russell, silver, copper, gold, Dow, crude oil, others such as the S&P 500, wheat, soybeans, and various smaller versions of markets. So if you don't want to try to save volatility in your account, instead of trading silver, you might look to trade micro silver. It's a much smaller position. There is a plethora of options here to trade, and you will typically find that if you're a futures trader, there is one or two markets that you're really drawn to. This is an excellent opportunity because you are matched up in one of the world's largest markets and one that is highly regulated. So you don't have to worry too much about price manipulation or shenanigans. Futures markets are a little bit different than Forex markets, but you'll find that for the most part, apart from things like memorizing the tick size and the times that some markets open, it really isn't a huge jump. We do have in the futures market the DOM, the DOM, and this gives you an idea of where the orders are. You can see that the micro NASDAQ, so this is 50 cents a tick, is moving around pretty wildly, but full disclosure, we're right before close. So there's a rush of orders. You can see here on the 5-minute chart how things got really volatile all of a sudden. Again, though, as we close down, it will stop, and then we will reopen at 5 o'clock Chicago, 6 o'clock New York time, and slowly build up volume and repeat the cycle.
Hola Prime, trade with transparency.